What is up, guys? Hope you guys are having an amazing day so far. Welcome to phase 2, guys. In this video, we're going to be going over ascending triangles and descending triangles. The two earlier videos you should have saw on market patterns were rectangles, how to trade them, symmetrical triangles, and now we're going to be going over ascending triangles and descending triangles, the rules to them, how to trade them, and where can you find them, and things of that nature. All right, so we're gonna get right into it. So let's start. First things first, an ascending triangle. So an ascending triangle is a type of market pattern that you see typically on uptrends. They have more bullish intention, meaning that they typically break out towards the upside. The same way symmetrical triangles break out whatever the market is in. So if it came from a downtrend, it typically goes down. If it came from an uptrend, typically goes up. A ascending triangle typically goes up, so it has more bullish intent. The rules to them, very simple. Triangle rules. This has a flat level of resistance and a ascending level of support. Okay? How to trade. If on an uptrend, trade within the pattern and possibly the breakout for a continuation buy. If on a downtrend, only trade within the pattern. All right, so I'm going to show you how it looks like so you guys could understand a little bit better. So what an ascending triangle looks like, it looks exactly like this. Has a flat level of support and a flat level of resistance and an ascending level of support. Why is this more bullish? Because again, in phase 1, we went over bullish structure and market phases. And how do you identify a bullish uptrend? Because price continues to make higher lows. As long as price and that specific pair continues to make higher lows, price will continue to push towards the top side. Again, we're going to be doing our analysis on H4 and daily time frame specifically. We can go down lower if we choose to, but mainly H4 daily, maybe even weekly time frames to get our analysis time frames. Our entry time frames could be on a smaller time frame. But since our analysis on our higher time frames, we have to understand even these little bounces are worth a lot of pips. You understand? And it's an easy trade. You're bouncing off a trend line, a higher low, a level of support, and a low, 4 confirmations in one, to a level of resistance, the previous highs. Price always moves to resistance and support. Remember that. So if it's on an uptrend, we can literally buy it every time and then close and then sell it if we choose to. Or once it gets closer, a lot of people ask, like, how do you know when the pair is going to pop? A lot of times that has to do with momentum and volume, specifically like what time it's coming, if there's news coming out. A lot of times news really is that extra like catalyst, that extra push to push pairs towards the top side, towards the downside. But typically it's when price meets. So like they just get closer. It's just like a build of a pressure. You see, like this will probably do a few more bounces, but once it comes down here, price is typically going to break out towards the top side, downside. Why? Because just think about it. Price has already built up enough pressure and needs to pop one way or the other. But this pair is more bullish because it continues to make higher lows. So if we're on a uptrend, we can look to buy it and possibly even hold it. Maybe you close half your positions here and leave the rest running. Maybe you close 85% of your positions, whatever the case may be, you know? But safest bet is just to close at the highs, but you can hold them longer if overall confluence is telling you that. You know, if everything is showing buys, then yeah, you can pull that trigger. Now, if we're on a downtrend, it's the same thing. Understand, the pattern stays the same regardless if it's on an uptrend or downtrend. Flat level of support, ascending level of resistance. The reason why I do not like to trade this is because, again, we went over structure in the previous phase. And for a bearish structure, bearish market phase, what are the rules? As long as price continues to make lower highs. You know, the objective of a downtrend is to make lower lows, but the overall focus is to make lower highs. So in this case, a lot of times you'll get a push up And this happens all the time. You'll literally get one of these, but then it's just a lower high. It's literally just a lower high to then just continue down. So a lot of times you get faked out. That's why I say it's better safe to just trade within the pattern if it's on a downtrend. Let me see if I could find you an example of one. Of an ascending triangle. Let me see if I can find you one of an ascending triangle. Understand they're never going to look perfect. Just like understand this really fast. So to me, that's an ascending triangle. You understand? Equal highs while also creating higher lows. That's an ascending triangle. Here. And again, this is all confirmation. Why is this not? The wick is touching it and it's still forming higher lows. Why not? What did price do? It came up to a previous high. Now understand that little push, again, since we're doing it based off higher time frames, this little push is still worth 100 pips, guys. 90 pips. Let's say you caught 40 of it. Let's say you just caught 30 of it. That's perfectly fine. 30 pips a day will change your life. Remember that. So this is more than enough. You understand? They typically occur pushing up, though. Typically, you'll see them pushing towards the top side. A lot of times, you'll see them pushing towards the top side. That's what an ascending triangle is. All right, so we already went over rectangles, symmetrical triangles, ascending triangles. Okay, now we're going to go over descending triangles. And now if we look at a descending triangle, what is a descending triangle? How can we locate descending triangles? It's just the opposite. So rules for a descending triangle. Descending triangle. So if a ascending triangle is more bullish, a descending triangle is going to be more bearish inclination. This has more of a bearish inclination. Rules to it. This has a descending level of resistance and it has a flat level of support. Typically, you see these once price starts to turn towards the downside. And the reason why, and now how to trade. How to trade. Again, if on an uptrend, only trade within the pattern. Why? Because price is still overall bullish, but the pattern is showing you bearish inclination. Again, this is for an intraday style format. You know, if you're going to swing it, by all means, you can enter it if you choose to, but you might get in drawdown maybe 30, 40 pips, 50 pips, depending on the pair. I'm not showing you guys how to do that. Like the trades that we're going for are 40, 50, 60 pip pushes, 10 to 15 pip stop losses, you know? So if it's on an uptrend, only trade within the pattern. If it's on a downtrend, so if it's on a downtrend, you can trade within the pattern. So if it's on a downtrend, you can trade within the pattern and trade the breakout continuation sell. So I'm going to show you an example of this. Again, you typically find these like when price is coming down. So not bearish per se, but once it starts to go bearish. A lot of times you'll be able to see this. So again, descending level of resistance, and they're never going to be perfect. Flat level of support. That is a descending triangle. That means every time comes to this trend line and creates a lower high, we could literally just trade the bounces. Like imagine you caught this push. Let's say you caught that one, that buy, and then you caught this one. And again, remember, trend is your friend is true, but what's the most important thing when it comes to the market? Where you are in the market. That is the most important aspect of trading. Where am I in the market? Okay? Let me see if I could find another pair so you guys could see it. That's what I was talking about. Descending triangles forming, how they form and things like that. Let's take a look at this. So price is still forming these lows, these lower highs, and then price kind of stalled out. This is on the daily time frame. So this is definitely an area of indecision. You know, later on in the phase, we're going to cover zones and exactly how to find these areas of indecision. But you can clearly see it. Not this piece, not this part, but this. 1, 2, this is the daily. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days it stood there. So every time price came up to these lower highs, we're automatically looking for sells to come towards the downside. You understand? We're just following it. And now, since this was coming from a downtrend, you can do two things: trade within the pattern or trade the breakout. Let's say you just held it for the pattern every time. Guys, 30 pips a day would change your life. Now, if you held it for the breakout as well, then we're talking about a massive amount of pips, a lot of pip count. Great trade. Great trade. Even trade. A lot of money in this trade. You understand? So it was just an overall an amazing trade to catch. If you were there, that was like almost 7 months ago, 6 months ago. Good trade, but the pattern was there. Is my point. It was an easy pattern. Let's take a look at this one. So now, a lot of times you get combination ones. So this is a head and shoulder. This is the head and shoulder pattern mixed with a descending triangle. Head and shoulder patterns you're going to be learning about later on in this phase, shortly coming, I believe. So they're very simple. Left head, right shoulder. Prices continue to make lower highs. We see that this high here. So think about it. It's a head and shoulder mixed with a descending triangle, mixed with a little rectangle. 1, 2, 3. 1, 2, 3. You understand? This is the daily time frame, so remember that as well. So numerous confirmations to continue selling. You know, now we could see these on uptrends. It is very possible to see them on an uptrend. But again, I just trade within the pattern if it's on an uptrend. Why? Because higher lows are typically always going to be maintained. So this is the safest bet. Guys, you can never predict the market. All we do is probability. So we try to do high probability trades, high probability setups. And this is a high probability setup, you know, if you're trading it for the breakout. So that is what a descending triangle is. That's also what a ascending triangle is. The final video of this phase, I'm going to do a capture of everything. So I'm going to do a video showing every single pattern. It's going to be the final pattern identification pretty much. And I'm also going to do in phase 6 and phase 7. Once you guys go later on throughout the actual course, you're going to see videos of how I trade, looking at setups. It's not that you're going to be looking for this setup, this particular setup. It's just going to come to you. All right, guys. Derek out.